Welcome back to Lem's Cryptoverse. Today we're going to discuss something that Glassnode focused on, and this is hodlers and hodling as they call it. But let's talk about the market today, and then I'm going to tell you why I'm feeling pretty good about things. Well, let me just minimize myself here. Well, the market according to heat map does not look good. Bitcoin a few minutes ago broke 16,000, and just a few days ago I was surprised that it broke 21,000. So we went from 21,000 to 16,000 like that, and I think you all know why, because of what's going on with FTX and Sam Bankman-Fried and his issues slash bickering on Twitter with CZ as they call him. So basically, we've got another black swan event, and if you look down there, I've got a video on what happened, and you can see it there. But for today, I want to focus on why I think we're at the bottom. Actually, we're past the bottom of what's called this. I'm calling the smile, and I'm not talking about the smile that you hear in options Greeks, right? That kind of a smirk of a smile that you see in options. I'm talking about something else, and to show that, to describe that, I'm actually going to show you a real live person here. Let's call her Julie. And she looks like she's from California and she likes surfing. I don't know, I'm just making this up as I go along. But the point is, if you look at her smile and you draw a line down from her nose, I think we're past the middle. We're like over here now, where I'm like scribbling. So this is a pretty good spot. So we're going to be going an up move. Now I want to show you her because heck, she's better looking than the other charts. But as you know, that the traditional chart is where you have stocks going down and there's that denial and that fear and anger and then capitulation. But I figured you've seen that before, but you haven't seen her. So she's bringing us good news. We're well past the midpoint of the bottom of the bear market in equities and in all crypto. So let me tell you why. So this time I'm going to focus on not just Bitcoin and sentiment. I always talk about sentiment in Bitcoin and the fear and greed index. We're going to focus on Glassnode. Glassnode did a special article and even video. They do both actually on hodlers. So we're just going to focus on hodlers today. But just so you know, there are many reasons to be bullish or bearish in Bitcoin and crypto. And for some reason, no one seems to talk about them. They talk about one or two things, but there are many, many reasons. And they come from different data sources. I'm just going to give you some examples, and then we're going to talk about hodlers. The first example I've got here, I've got moving averages. Then you got, I don't need to tell you, Willy Wool. The infamous Willy Wool has all kinds of data on the movements of Bitcoin and crypto. And then the sentiment data, which I mentioned. And it's not just sentiment in crypto, it's sentiment in equities. And then there's futures. You've got the commitment of traders, also called COT. You've got the futures curve. You've got the pricing on perpetual futures options. Not futures options, on perpetual futures. Then you've got options. You've got the put to call ratio on Ether and Bitcoin. And you've got implied volatility. And by the way, the market's crashing as of yesterday and today. And I see some positive sparks in options markets. A little technical, but I'm seeing some delta and some positive gamma, basically. So what I'm seeing is not just implied volatility, but what I'm seeing is an increase in the rate of rising volatility. I know that sounds a little crazy, a little complicated, but basically implied volatilities in the options market have been too low. And this is why the market's going down. But now we're seeing a rapid increase in those volatilities. And that's basically the first derivative of delta. And lastly, I did 2 videos on production cost where I predicted that Bitcoin could go as low as, I forgot what I said. I think I said between $10,000 and $13,000. And that was based on all kinds of data, including financial reports from the largest Bitcoin miners. And it's also based on on-chain metrics such as the difficulty rate hitting an all-time high and the hash rate hitting an all-time high, where I said, you can look at my older videos, but basically in those videos I said there is no way that Bitcoin and cryptocurrency can be at the bottom if the hash rate, for example, is hitting all-time high. It just makes no sense. And last but not least, I didn't mention that total leverage in the futures market, including options and futures, is way too high. We just hit an all-time high a month ago. That makes no sense at all. So that's stuff I said for the last 3 months, and you can look at my old videos for that. But what I want to talk to you today is specifically on Hodlers from Glassnode. So let's get started. So here is one of the charts that Glassnode was shown. So with their main thesis today is that Hodlers remain firm. And they gave a whole bunch of charts for that. I'm just going to focus on a few. And most of these are positive, but what I want to talk to you today is you got to know how to read these and you got to be very disciplined. So I'm going to show you some positives because I said we're halfway through the smile, but I'm also going to show you some areas where I don't think we're that positive. So this is really positive. So here they're talking about, in red, there's an inflection point. Well, you know what? Let me just show you. To make it easier, a picture always tells you more, tells you 1,000 words, right? So for example, there's basically 2 regimes. You've got the distribution regime and the accumulation regime. And these regimes were categorized by Glassnode. And the first one, the distribution regime, overall, people are selling coins. They're not hodling them. They're not holding coins. That's the distribution regime. But let me move myself again here. But as of July 21, after the market declined, hodlers of all ranks, of all sizes, whales, sharks, shrimps, people that have less than 1 Bitcoin, they started accumulating and have continued to accumulate Bitcoin. And you could see here in this orange line shows you how many coins are accumulated over time. And if you could read in green, you could read it says hodled and lost coins reaches new all-time high after aggressive accumulation. So that's a very, very good sign. So let's go to the next chart. This chart here, sorry, I keep moving myself. This chart here talks about Bitcoin, but only supply less active in the last 6 months. So what does that mean to you? Well, some of you people are day traders, so 6 months might be an eternity, but typically 6 months, a supply of 6 months, these are like younger coins. And these coins, and you can read what I wrote here, the supply of younger than 6 months coins available on the market has remained around historic lows since May 2022 and continue to decline. So this is a good sign. And as I said, it further reiterates the extreme level of hodling present in today's market. And again, you can see Bitcoin supply less active, less than 6 months. And that blue line is what they're talking about. That's what you should keep your eye on. The black line is a Bitcoin price. The blue line is the supply less active, less than 6 months. And you can see here, they put a horizontal line where it says percent supply less active, less than 6 months. So basically, this is a good sign. This is a good example of what we want to see at all-time lows in Bitcoin. Next chart. Here we're talking about realized cap hodling waves. So let's talk a little about it because I was told some of this stuff is technical, people are not familiar with it. So I'm going to read you a little about the definitions. You could always pause the video and then read the definitions. But let's read this one together. Basically, it says, next we assess the realized cap Hodl waves, which allow for the inspection of US denominated wealth by specific age cohorts. In other words, just to make it simple, they're tranching them or dividing the Hodl cohorts by age. That's all they're doing. In other words, some of these coins are less than 3 months old for you day traders out there, and some of them are much, much older, and some of them have never traded, like Mr. Satoshi Nakamoto, wherever you are. So it says here, currently the US dollar wealth held by young coins is at an all-time low, representing only 10% of the network realized cap. So that's a good sign, right? Because think about it. People that own young coins, what do they tend to do with them? They sell them. So you don't want young coins in a network. And let's go to the chart here. So Bitcoin realized cap Hodl waves. And you could see, as I mentioned it 15 times already, that see this horizontal line here, this blue line, that represents coins less than 3 months, and they account for 12% of realized market cap. So that realized market cap, that that percentage is similar to the bottoms that we had in 2019, 2020, 2015, 2016, and even 2012. So this is an excellent chart. It's very good. And take a moment to take that all in as I sip my tea. Let's continue. Okay, this is Bitcoin reserve risk adjusted. And what this one shows, this is a bit complicated. I'm going to go to the definitions. You can read them on your own, pause the video, and then we can talk about it. So I'll just read you the beginning. It basically says we can leverage the adjusted reserve risk. And this is a new variant invented by the author within the Glassnode company. And basically it's a cyclical oscillator. So it basically moves up and down. And it quantifies the balance between incentive, aggregate, I should say, incentive to sell and the actual expenditures of long dormant coins. I know this sounds complicated. You could read it yourself, but I'm going to explain to you what it means in simple terms. When there are a lot of young coins, there's more of incentive to sell. But when there are coins that are beyond a certain year, those owners they just tend to sit on them. Like if they're going to hold a coin for 1 year or 3 years, the odds of them holding them for another year or two is pretty high. And what they've done here is they've diced them into 3 phases. And you want to see us moving from phase 1 to phase 2 and then to phase 3. And this is exactly what we're seeing. So you want us to eventually get to green. So we went from pink to orange to green during the 2015 bottom. And then in the 2018-19 bottom, we also went from pink to orange to green. And again, what they're saying, the author is noting that we also went from pink to orange to green. So this is denoting what I talked about when I started this video, that we've got that smile, basically what I should have said earlier, that the whole part of the smile, her beautiful smile, is to say that the bottoming process in a bear market is not overnight. What we saw in March, April 2020, that V-shaped declining recovery, that is not the normal bear market, especially when you have a regime change, meaning much, much higher Feds, higher Fed rates, and a hawkish Fed. When you have that with a regime change and probably a hard landing, you get a or I should say longer bear market. That's why you get this smile, this long bottoming formation. So let's get back to here. So that was the whole point of why Glassnode derived this, created this chart, and that's why I'm showing it to you, to show you that we're over halfway there in the bottoming process. Then we got some so-so news here. This is called Bitcoin total transfer volume. So yeah, this is a very technical video today. Again, please read what we have up here. So basically, it's showing the decline in transfer volume and for different size coins, basically. As you could see, maybe I should make it larger. Like the pink is 0 to 1K, the orange is 1K to 10K, and the yellow is 10K to 100, and then it gets darker. You know, it gets to a darker green, and then like a teal color, like the color on this wall. That color is for the whales. Those whales have that color. So basically, what they're saying is, again, we're talking about this bottoming process. You want to see this declining, and that's what you're seeing here. But what I want to point out with this one in the next chart is, I don't think when it comes to this one, I don't feel like we're at the bottom yet. I feel like we could go lower. Not much lower, but I don't feel like we're at the bottom yet. And actually, they're even admitting it because look, you remember earlier in the previous one, I said we've got these 3 stages, pink, orange, and green, and we have an analogous one right here, pink, orange, and green. But the problem is over here, it's good. We've got the 3 phases that are met, but we're not meeting the 3 phases here. We got the pink and orange phase. We did not get to the green phase yet. We're expanding upward in that transfer volume. So that is a negative. So it's not all roses. And I think I just showed you this one. I wanted to show you one that was similar. It's this one here. So again, this is similar. This is called Bitcoin total transfer volume, and you could read that. What this one's focusing on is specifically transactions worth 1 million or more. And we're not seeing, okay, we're seeing a decline, but we're not seeing the 3rd stage where we're getting to expansion of transfer volume. So number 1, I would like this chart to go lower. And number 2, we need to see that expansion and transfer volume. So that's it for today. I don't want to spend too much time because I know this is quite technical and you're going to need to stop the video and go over it. But times are pretty tough. We're seeing yet another black swan event in capitulation in Bitcoin. But the good news is, as I said earlier, we're way past the bottom of that bear market smile. We're going to be moving towards the top end where we start seeing accumulation and we're going to start seeing capitulation and even in equities and Bitcoin. So I see light at the end of the tunnel. So if you like these videos, don't forget to come back and like us too. Bye-bye.